Hello again, traders, and welcome out. This is Ankit from Mavic Currencies here, and this is a quick preview on the US CPI report that's due tomorrow at about 8:30 AM Eastern Standard Time. So this is a highly anticipated report, so let's break it down and then talk about possible case scenarios. Again, as a trader, we need to be prepared for whatever the outcome is. If it's a good report, bad report, we need to be prepared for the both possible case scenarios. So let's take a look at what the expectations are so far. So we are looking at a forecast of a 0.2 versus 0.1. So again, inflation is running hot. We are actually not really seeing the price pressure coming down. So overall, going into this report, the expectation is for inflation to kind of stay high. So I think the markets are really pricing in that worst case scenario already. So as we take a look at the charts, and this is where we need to break it down, our currency baskets, and see, okay, where things are standing as far as the prices goes. So let's just break it down. US currency basket. So this is again looking at US dollar again against all the other major currencies, and then looking at it, where is the movement happening. So if you go back in time, we'll see that there's a whole lot of randomness to this CPI report. A lot of times we have seen the expectation has been met. Sometimes it's above expectation and sometimes it's below expectation. And the price action is just moving all over the place, going into the report and going after the report. So we'll look at the data going back to May of this year, and we'll see, okay, since May, we only had one report that came out in August that was below expectation. But outside of that, you'll notice that May, June, July, and September was above expectation. So the only time we saw a big little correction here, big candle on that news came out on August report. But another thing to kind of pay attention to is that it's not always when we get this expectation beat that will result in the US dollar being higher. We have seen again over and over the dollar has actually run into the report, but that hasn't really carried the dollar further up, especially even with that beat. So that's something we need to pay attention here. Is anything different in the markets? Should we expect further continuation, especially where the dollar is right now? If you take a look at this chart, we are, since the last report that came out back in mid-September, this is a massive gain in the dollar that we have seen so far. So if we take a look at the percentage change from that point on to where we are right now, the dollar is up 7.5%. Now, that's a massive move. Sometimes we haven't even seen that kind of move in a year that we are just seeing within a very short month period. So it's clear to me that the dollar is really is where the money's been piling into. And right now, markets might be pricing in another worst inflation report. So this is where, if the expectation is all kind of priced in, can we then get something that will carry forward, or can we get something that will sell on the news? So let's go back in time. Let's take a look at what happened back in May of this year. So in May, you can see that the price action was very positive. As we got that report on May 11, you can see where only one day where we got that further follow through. And right after that, we saw a nice big correction. Now, fast forward to June. And in June, we saw that the price action actually just started to run off of that CPI report. So notice that it wasn't really priced in at this point. We've seen a nice correction, and that the increase in this number really got the dollar to go higher. Now, fast forward to July, and we have seen that the dollar was actually quite strong. If you look at where we were from this point on to this point on. So let's just take a look at from June the 13th all the way there. We've seen the dollar from this CPI report, dollar was actually nicely up 3.5%. And shortly after that, we got a nice little topping candle, and then things started to turn lower. So as we can see in the time in the past, sometime when we see a price action that's already running ahead of it, a lot of times you can still get this selling on the news. Even though the numbers beat expectation, the question at that point is that, okay, what's next? Is the market really pricing it in? Or do the market needs to price in that new information? And that's exactly what happened in the last report. So if you look at the last report, we saw a dip in this dollar or this dip in this CPI report. And after that, you see the dollar actually did go higher, but going into that report, dollar was actually pulling back. And then that was a bit of a surprise. At that time, everybody was expecting 0.1% on the negative side versus they came out at 0.1 on the upside. So that was a big sort of a change in what the markets were expecting. And there you go. Dollar had a big move over here. And after that, it just continued running. So at this point, I mean, we don't want to be going against the trend. But we also want to be mindful that wherever the dollar is right now compared to the last report, I mean, 7.5% is a massive move. So what can really change here? I mean, one of the things that we can also kind of overlay in this chart is what the equity market is doing, because right now it's a very positive, strong correlation that we are seeing in the equity markets and the currency markets. So if you take a look at we'll get to see that, okay, the price action not always has been spot on, but then there have been times when things are actually moving a lot more in this correlation here. And right now what we can see is that as the markets are dropping, the dollar is taking off. So there's a very nice correlation that's taking place, which means that if the markets, this is all about what the market's going to do tomorrow. If the markets can find a bottom and rise, I think the dollar will pull back. If the market actually take another leg lower, I think the market likely to stay, or the dollar likely to stay strong. So let's go back in time in May and see what the markets were doing at that time. So as you can see that right off the CPI report, market rallied and the dollar did fell. Okay, that's a good spot on right now correlation there. And right now over here, you can see that as the markets start to bottom out here, the dollar actually started to top out as well. So nice little correlation there. Now looking at this area, same thing. We saw the markets go higher, the dollar goes lower. Now in this area, same thing. The market went lower and the dollar went higher. So this is where you really have to pay attention to not just the dollar, but you have to take a look at other components that's really moving the dollar. We can also compare this to the US 2-year yields, and I've talked about the yields where there's a very nice little correlation going as well. And you can see as the correlations are working out really well as well. Again, in the blue, we have the 2-year yields. As you can see, exactly the same chart, same scenario. As the yield stays up, it's keeping the dollar up. So if you're really looking for the cues, I think this is what we need to see. We need to see the yields actually pull back. So if you go back in time, we'll see this over and over again. At this time, I mean, there have been times when the dollar has been outperforming more than this yields, and that was the case back in May. But after that, you can see that they're kind of moving a lot more in tandem here. And if one comes down, the other one comes down. So that's another thing we need to pay attention right now. We are seeing consolidation going into this. So whenever you see consolidation, it's this is where it could really move one way or the other. We can see a big breakout and kind of fall back, or we can see this just go down straight. So there's all these possible case scenarios that we have to prepare for as a trader. And this is the dollar with the yields, with the equity markets. These three things will go hand in hand. So when we take a look at the trades, we have to talk about possible case scenarios and the ways to trade them. So there are 3 methods of trading, and we talk about this at every news event that we enter before. Enter on the news, or you enter on the second stage. Remember, when there's big moves happening, again, second stage is not a bad idea. As we go back in time, there was a lot of movement happening after the initial release. We can get on the news, and sometimes we can get on the beforehand if we have a better idea where we think the market's going to go. I think at this point, it's difficult to kind of talk about where the market's going to go. I mean, right now, just a gamble. If you think the yield's going to go down, or is the CPI is going to be hotter than expected, again, I think at this point it's a coin toss. So we got to talk about possible case scenarios and then making sure that we use the right order entry for it. So slippages is something that's very common around these news events, especially in important news events where price actually can move really fast in a very short period of time. So slippage is something that, as you're trading on the news, you got to be watching out for that. there's not a guarantee that it will fill you in at your stop price if there's a gap. And that's one of the reasons where we like to use a stop limit order instead of just a stop order. You want to give yourself a little window. And if the price moves out of that window, then again, we don't want to be entering it, because that will really screw up your loss management on that position, on the stop loss for that. So another thing that we need to kind of watch out for tomorrow, and I think this is a possible case scenario, seeing some sort of whipsaw. So when we get buy the rumor, sell the news, and again, a lot of times you can get whipsaw on that, where the initial price action goes to the upside and then it just pulls back. And sometimes we get this little seesaw price action where it just goes up and down, and at the end the prices just come back to exactly where it was. So this usually can happen, especially when the report is more in line with expectations, so you get a little bit more upside, and the downside, it just comes right back to where it was. So I think as we take a look at tomorrow's report, I think the second stage entry would be the best. I mean, we might want to just let the initial price action settle down and then see where the price action take us. Like I said, it's hard to sell something right now in this strong trend, but at the same time, buying it into this trend right now could be a little bit more risky as well, because there's a possibility for buying the rumor, selling the news. So let's talk about trades. Let's talk about possible case scenarios and do a bit of a analysis on, okay, what pairs can we really take a look at in the next 24 to 48 hours. So let's take a look at some of the velocity scores and take a look at on a technical basis, what looks the best. So right now, as we take a look at the dollar, we will be primarily looking at the dollar crosses. And as you can see, the dollar is really stagnating here. I mean, we are going into this report, we're seeing a bit more of a tapering off here. So like I said, we can get a pop up and a breakdown, or we're going to get a big flush down and then trying to rise after that. And that's exactly what we've seen in the past. Again, initial price action, notice that maybe a day later, it's not a bad idea for these to enter. I mean, especially right back here, you can see we got a nice little run up, we pull back, and right after that just created a bit of a downturn in this dollar. So I think at this point, we just have to look and see how things will turn out, and especially with the equity markets as well. I mean, going into this report, let's take a look at the equity markets quickly here. You can see that the equity market looks pretty weak. So right now, this is very difficult to, like I said, be long or short the dollar, because everything is pointing out for long the dollar. But at the same time, if we get a big flush down and we recover, I think we can see the very exact same price action in the US dollar as well. So again, tomorrow is important. And again, watching out for these levels. If we start to see some more acceleration to the downside, I think the dollar will kick up as a bit of a safe haven currency. But we need to watch out for tomorrow is how this candle will end, and that will again start a big trend. So if you go back in September, I mean, look at that initial price action was very strong. But after that, this is where the big move happened. So a lot of times we want to get in right at the news event, but a lot of times after that, we get a nice little opportunity as well. And this is where I like a second stage entry tomorrow, because there's a lot of volatility going to go in play. But again, we have to really see when the dust settled, which way the price action will take us. So we can talk about, okay, let's do another currency basket analysis and see, okay, how things are setting up. So we are seeing the Kiwi stabilize a little bit here. I mean, look at the Kiwi has been on a tear since September. As you can see, since the last report that we got over here on September 13, around the same time the dollar took off, I think the Kiwi really got hurt over here. So, I mean, right now we're seeing a little bit more stability in this Kiwi. So I think at this point, I don't mind taking a look at this for a possible reversal as we get above this moving average here. But I think right now we'll still have a little bit of pressure. If we can get above this tomorrow with a positive candle, I think we can see a little bit more chances for a rally in this Kiwi as well. So going into the Aussie again looks a lot more weaker. So again, if I want to be going long the dollar, I think that's where Aussie would be the better play. If I want to be shorting the dollar, I think Kiwi would be the better play. Let's go outside of that. I mean, some of the currencies are just stuck right in the middle. Like CAD is right in the middle. Now, pound has been kind of rising here a little bit. Again, I don't really want to buy the pound, especially as what's happening in the bond market there, and with some recent comments. I think you just have to be very careful for the pound. So I'm not really interested in the pound at this point because of those possible risk case scenarios. And outside of that, I mean, we have the euro and the Swiss franc just holding steady. I think euro dollar would be a decent one that we can pay attention to for a possible reversal. But outside of that, we have the yen again trying to get lower once again. Again, if you take a look at dollar yen level, and that's another pair that we really need to pay attention to tomorrow, as we are now getting into this uncharted territory. Remember the last time we got this intervention as we hit that level. I think tomorrow, if the dollar yen shoots up above that 147.11 to 148, I think this is a tricky one because technically everything looks good. But at the same time, there's a risk for further intervention, especially if the dollar yen continues to kind of get out of control there. So dollar yen, again, watch that 147 level. I know we're sitting right at that level, but tomorrow we'll have to kind of see if this kind of breaks out and quickly pull back in, or is there going to be more? If this really breaks out to 148 level, then is there going to be chances for further intervention? So that's something we got to pay attention to. And I think outside of the dollar yen, there's other places that you can really find decent opportunities. We have the dollar CAD, as you can see, sitting right at the top here. Pull back to the recent highs. Again, I think a further breakout strategy on dollar CAD looks good. I think as far as the target goes, we can see this, get into this 140 area pretty easily. So that one we'll be paying attention to, called dollar CAD, on a further breakout. But again, same thing. If this rejects, then we have a nice little range to play with. I mean, at the bottom end is 135, on the top end is 138. Again, I would love to kind of see this making a fake head breakout and pull back in. That would be, again, a nice little range break route or range trading here from the 138 to 135. So outside of that, euro dollar, again, if you look at the euro dollar, I would love to kind of see this make a higher low here. I mean, right now you can see this has been in a downtrend, and this time around we got a little rally up above this moving average here. I think this is a nice little pullback. And again, tomorrow will be a do and die for the euro. If the dollar is stronger, this will break lower. If the dollar makes a turn, I think euro dollar get a lift as well. So I really like euro dollar in both case scenarios, but mostly on a further upside, especially if this really finds a short-term bottom here. Aussie dollar is a tough one to really buy. Then this is where you just got to pick the right currency pairs. I think euro dollar looks much better compared to the Aussie dollar. And if I have to really continue with this dollar strength, then the Aussie dollar, again, looks more weaker to me. I mean, finding Kiwi dollar, a little bit more stability here. So remember, as you're trading the Kiwi and the Aussie, they're more in line with the risk sentiment. So if the equity markets rallies tomorrow, then the Aussie Kiwi likely to gain the most. If the market actually is a bit more jittery and a little bit more unclear on the direction, probably euro and the other crosses will be a better play. So that's really the game plan for tomorrow. Again, use stop limit orders for any before on the news trades. Again, dollar is strong going into this report, so watch out for a possible head fake breakout. But again, I think right now, not only the dollar, you got to pay attention to the 2-year yields, pay attention to the equity markets, and the best trade will happen once they all kind of come together. So watch for Aussie dollar, Kiwi dollar for the most negative correlation. I think that's where the biggest move is going to be. And again, watching out for the dollar yen cross above that 147 level. Like I said, technically, there's nothing really telling us that it wants to turn lower. But again, what we have seen in the past, just not too long ago, we got a Bank of Japan intervention. And again, if that exchange rate gets out of control or gets out of a certain level, I think that's where the Bank of Japan will strike again. So watch out. A lot of caution in these markets. Let the dust settle out, and there will be good trading opportunities for the rest of the month. Thanks, everyone, for joining, and again, good luck tomorrow. Cheers.